Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with our friends Tim Stenovec and Simone Foxman in for a vacationing Carol Massar. Our audience is across all of our Bloomberg platforms. Welcome to the show here, Tim Stenovec. Once again, we're going to do a quick check on your Bloomberg terminal just to make sure that it's working here.
Everything's
I
working
see red
properly.
across the screen.
Yeah, I see red across the screen as well. I want to thank you for fixing it yesterday after the program, Romaine.
Absolutely. That's what I do.
You totally got
when
it
the lights go down
during the commercial
and
break,
everyone
that's what
goes
he's doing.
home, I just stay behind. It's like
a man
like the
wears
Velveteen
many hats
Rabbit
here.
just running around the department store.
Look, I think the tone was set early in the day when we got the economic data. There's not much economic data coming this week, but when those ISM services numbers came in hotter than even the analysts at the top end expected, Simone, the concern was, of course, the Fed is going to have more work to do, or at least stay higher for longer.
Yeah, certainly that the choice that seemed clear to markets at the end of last week isn't going to necessarily be as clear as it might have been. We're looking at 5-year yields back above, 2-year yields back above 5%.
Yeah, and you pause at that 5 number because it's the one that we've all been watching for, especially as you get a lot of corporate bond issuances. We were just talking with Julian Emanuel of Evercore ISI, and he was saying undoubtedly the flood of corporate bonds coming out is negative for treasuries as investors sell treasuries to make room for all this corporate credit coming on. And that kind of dictates where equities go next. For today, it's clearly to the downside.
Yeah, and I was looking at the correlations. I mean, the correlations between Treasury yields, the inverse correlation, actually probably the deepest that it's been for a good portion of the year here, too. So that's one of the reasons why you're seeing it. But interesting, Julian Emanuel was saying how that could actually reverse itself as we get deeper into the rest of the year here. Let's take a look at the equity markets right now, down for a second day with the Dow Jones Industrial Average slipping by about 200 points or about 0.6%. The S&P 500 down about 31 points or 0.7%, while the NASDAQ composite is going to close out the day lower by about 1%. And the Russell 2000, which yesterday was the big laggard, on a relative basis is your outperformer, though still in the red, down by 0.3%.
Yeah, peeling back the layers of the S&P 500, 207 stocks moving higher today, 296 stocks, Scarlet, moving lower on the day.
All right, let's take a look at the sector performances here. And when we split the S&P 500 up into 24 groups, on the downside, you have tech, hardware, and equipment. That's really Apple dragging things lower. Auto and components off by 1.6%. That's Tesla. And semiconductor companies, NVIDIA, dragging that group down 1.5%. On the upside, no group has gained more than 0.4%. Consumer durable and apparel gaining 0.4%. Insurance and food and staples doing a little bit better.
All right, let's take a look at some of the gainers. Didn't have to look too hard to find some green. Actually, a lot when it comes to medicine here. Dexcom Inc. Up 6.5% on the day today. It's a medical device company that makes continuous glucose monitoring systems for people who have diabetes. This is interesting. An analyst from Jefferies comes out and said that the GLP-1 obesity drugs, we're talking Ozempic, Wegovy, and more, those appear to increase the uptake of type 2 diabetes continuous glucose monitors. That's according to a presentation from the company. Shares of the diabetes device makers have been pressured over concerns that these GLP-1 drugs will impact growth for the industry. Another story tied to these anti-obesity drugs in moving stocks today is Zimro Biomet Holdings, up 4.1%, also among the gainers in the S&P 500. This is a medical equipment maker, and the company CEO, Ivan Tornos, said that he sees rising demand for these weight loss drugs as a tailwind for the company. Here's why. He says you've got a large percentage of patients here in the U.S. that are actually too obese to get some of these implants that the companies makes. They don't have the right BMI threshold. So if they take these GLP-1 drugs, then it'll be a tailwind for the company. And then Roku shares rising on the day today, up by almost 3%. It surged as much as 14% early in the day, gave up some of those gains. The company did say in a filing early this morning that it was planning to cut about 300 employees. That's roughly 10% of their workforce. It's going to consolidate office space. It's going to reduce its content portfolio. Basically, just try to save money. They're going to limit new hires as well. The company did warn last year that it expects a tough economy to pressure consumers and advertiser spending. And then remember back in March, it said it would cut about 200 employees, 6% of its workforce, as part of a restructuring. So a couple of restructurings there this year.
Yeah, well, it's easy to turn some of the negative news in the markets into some big declines in some of our specific names. AMC today, that was a big loser, down almost 37% after filing plans to sell up to 40 million shares of common stock. You may remember there was a lengthy court battle here, but a judge in Delaware sided with the company last month, and so the company is going ahead with those plans to sell those shares in an effort to raise money to improve liquidity, refinance. But in the filing noted, and maybe this is some of the negativity too, that the stock is highly speculative and involves risk. Overstock shares also down today, now ending down about 23%. This after the company gave a performance update. Remember, it had purchased some of those IP rights to Bed Bath & Beyond, especially bedbathandbeyond.com, and so done a relaunch. It's seen more customers and seen the number of orders increase, but its margins are maybe on the decline. So analysts trying to figure out what's going on there. Also, Lockheed Martin shares falling there about close to 5%, 4.75%. The company's needing to delay the delivery time of its most advanced F-35 jet. It was originally scheduled for December, now April 2024. And finally, Apple. There was that Wall Street Journal report out. This has been dragging on shares all day. The Chinese government agencies have banned staff from using iPhones, also other foreign branded devices. Admittedly, foreign branded devices have long been discouraged, but there was the biggest intraday drop here since August 4th.
When we talk about some of the moves, at least in the broader market here, of course, a lot of that was driven by the uptick that we saw in yields. Most of that occurring on the shorter end of the curve, 6 basis points higher on your 2-year and your 5-year yield, about 3 basis points on the 10-year. Meanwhile, your 20 and 30-year yields actually dipped slightly here. But the big rise that we saw on the shorter end of the curve, of course, the more policy-sensitive end of the curve was obviously linked directly to that ISM services report that we got earlier today. It came in hot, certainly on the headline number, and the prices paid number also caused a lot of concerns, enough concerns, Scarlet Fu, that we actually did see the swaps market start to price back in expectations for a Fed rate hike this in November, about a 60% probability of that. Just yesterday, we were at barely a 50-50 chance of that, a coin flip.
Yeah, we also just got GameStop earnings out. I'd love to respond to that ISM number, but let's just take a look at the GameStop numbers right now. Second quarter net
profitable?
sales beat estimates. No, adjusted loss per share of 3 cents. Analysts were looking for a 14-cent loss, so that's better than anticipated.
Yeah, better than anticipated, Scarlett. Thank you. You're so short and sweet there. Shares a little higher here in after hours trading here. And of course, this is interesting that GameStop is saying that it won't be holding a conference call today.
There it is.
That's kind of interesting, too, the communication coming out. If you remember the last couple of quarters, their conference call was, well, let's just say brief. And of course, we know this is now a quarter where this is the quarter where the CEO's gone. This is basically Ryan Cohen's ship right now to steer. And whether we're going to get some guidance on how he's going to steer it beyond what's in the press release, that remains to be seen, guys.
There's not much in this press release.
I know.
It's
I've already
literally
read it. Yeah, it's
just
like a pamphlet.
There's, it's so rare, Romaine, that you have a press release come out with zero commentary from the company's CEO or the CFO. There's not one quote in this at all.
Can I just say the boilerplate is longer than the numbers they've provided?
Yeah, that's a really good point.
I mean, going into this, though, Wedbush analysts had said they thought that the results would be, quote unquote, fine. I mean, how much were we looking for here? I guess that's the question mark. Maybe while we're seeing the shares kind of fluctuate, is there?
Yeah, well, everyone's kind of scratching their heads, and we're not going to get a conference call to dig into everything. But Romaine, you were talking earlier about the ISM services number and how hot they were. There was another data point today, I guess, the Fed's Beige Book. What was your takeaway from that? The way I read it was we're spending like drunken sailors this summer, high on concerts and everything else, Taylor Swift, Beyonce.
Yeah.
And now what? The rubber hits the road because everyone's paying back their student loans, and you got to tighten your belt. Is that the takeaway here?
Well, I thought it was interesting. I mean, you did hear in that report there was a lot of anecdotal comments about job growth actually moderating. There was a lot of anecdotal evidence here, though also that, well, a lot of those labor market imbalances still persist here. And the idea that price growth was also slowing as well. But it gets to the idea, I mean, just to link it back to the ISM, is I don't know if you can really pick a direction for the economy based on any of these data points, whether they're hard data or the anecdotal data in the Beige Book here. This is kind of still, I think, an economy that is kind of what you want to make of it right now. Now, whether that's going to sort of come back and bite you in the behind down the road remains to be seen.
Yeah, I mean, I think back to what happens when those student loan payments restart and consumers, pull back on their spending as a result of having to pay that money each month. My big takeaway from the Beige Book was that things are actually looking pretty good in terms of what the Fed is doing. I mean, the Fed's what the Fed has done is making its way into the economy. I think the big outlier today was that ISM services number.
Yeah, it'll be interesting to see when we get. I mean, I know we get CPI next Wednesday,
Yeah.
right, a week from today, and then 2 weeks till we get the Fed meeting where they're going to give their economic projections. That might give the market a little bit more clarity in terms of at least the way the Fed views the economy, and then of course what the Fed does.
What if the totality of the data also confuses the Fed the way that it confuses the market?
Then they're overpaid.
All right. And don't worry, we'll be covering it. And you guys don't worry, because we're going to be back tomorrow at the same time, same place. That is going to do it for Beyond the Bell this afternoon. Our cross-platform coverage of the market close on Bloomberg TV and radio, Bloomberg Originals, and YouTube. Meanwhile, catch us same time, same place tomorrow.